Okay guys, so welcome again. In this video we will check Yearn finance and also Stellar. And I will be more than happy to talk about something very important. Many questions about Elliot waves. Okay, it's very important. Do you think Elliot wave it's a successful science so we can profit from it? I am not against Elliot wave, by the way, guys. It's a science and we do respect science, but I am against the way of using that science. Okay, because you can turn anything positive to negative just by your thoughts, by your feelings, by your emotions, and etc. Also, mistakes that Elliot wave or Elliot wave traders are making is simply they are trading based on their self-reflection. So many of them are falling into a kind of hallucinations. Okay, it's a kind of hallucinations. Sometimes you can see, hey, this is the points one or the wave one, okay, and then we can have a second, and I think this is a confirmation to have a third, but it is not necessary. Okay, it is not necessary. Yes, probably we can have the same points, what we call ABCD, the pattern inside the classic way, classic patterns. Okay, like head and shoulders, like Adam and Eve, and also ABCD pattern and etc. It is not necessary for the market to use that. So whatever you are using, you will stay under the probabilities. Okay, you will stay under the probabilities, because the big question is what is the next movement here? Do you expect the next movement? Guys, I'm not actually willing to use any kind of science as long as there is nothing guaranteed the future. So it is Elliot waves, I don't care. So that's why the power of algorithmic levels can hikes only or rise the probabilities of making money, or simply makes you buy at some support with high probabilities. Excuse me guys to explain to you what do I mean. For example here, okay, sorry. For example here guys, you can see that there is some reversal candles called hammer. This is one of the momentum it helps the momentum to continue to the upside. It's a probability. Okay, it's a probability. You can buy based on that. It already happens, but no guarantee that the market will continue to that. Okay, maybe we can retest, for example, 25,000 and we can have another low, then we can fall. But considering the technical analysis and considering the classical school, we know that when this guy here appears, then probably we can say everything is okay. Okay, but trust me, we can have many probabilities. The power of algorithmic levels is not to predict the market, but is to go with the market itself. Okay, so let me explain to you here, guys. Many technical analysts will say, hey, this is a hammer. For algorithmic traders, they are not looking for a hammer. This is nothing. Okay, for me it's over. Look at this. It's almost 40%. Hey, you are now buying the highs, and you don't really know. Yeah, we know that probably we can continue, but this is not the question. But if we use this indicator here called the moving average, and we can adjust each time the parameters and the offsets, then we can have a good perception to understand where is the structure point that probably the market can reverse. So based on the algorithmic levels we buy, not based on the predictions. So when you say, for example, this is a pattern A, pattern B, pattern D, if we have that, then we have this. This is just predictions. And by the way, the predictions inside the market, guys, what's I think we'll never tell you that, is whatever is your strategy, you will not hide or actually penetrate the 33. Okay, this is your resistance for each and every prediction. Okay, why? Because 33%, okay, 33% represents a bullish people, okay, and another 33 represents the bears, okay, and another 33% represents the people who are out of the market and they are ready to buy. It's scientifically. So if you are here with the bearish, there is an opportunity for the bullish to make it, and vice versa. So the power of algorithmic levels Okay, power of algorithm levels is based on that kind of calculation. So we buy, if we have the structure points, then we can add this and this. Okay, this is what we call them, we can say apostates. Okay, a religious word. Okay, the people who was bears and now they convert to be bullish. Okay, so this guys becomes now bullish after they was, or before they was bears. So now they becomes bulls. So now 33 and 33 become 66. So 66% out of 100%. Now we have to add some numbers here, some percentages from the other 33, and we need only 70% that our trade will go higher. If we use that 70% in each and every trade, so that's mean guys that each 10 trades we have 7 profitable one and 3 losing guys. And here we can add another powerful perception, which is the risk management and the targets. So here guys, if we can say, for example, hey, I want to risk $100 to make, say, $300, then we can hike our probability of making money to 100%. Okay, to 100%, especially if you are respecting the stop loss and other kind of other tools of money management. So guys, I think it's fine now. So that's why I am against, I'm not against 100%, but I am against probabilities and trading based on technical analysis and based on Elliot waves. And I think Elliot waves and harmonic are the same. Okay, because based on the Fibonacci we can use anything and we can expect everything. So this is my strategy guys, and that's how hedge funds traders are working. You will never find a trader inside a hedge fund use indicators or use, for example, say Elliot waves or some pattern. Never. It is all about numbers and calculations and where are we inside the market. It's all version charts. Okay, sometimes you can find 2, 3 like that, for example, like that, and etc. Okay, so guys, I think this point now is clear. Let's check the Yearn finance targets and what is the target for today. Like I promised you guys, I will teach you something really new, and I'm trying to simplify things. I don't want to use mathematics and some other things so you can make things very complicated. No, we want to simplify things. The market is simple, but it's not easy. Okay, so remember that. So Yearn finance now for this week, guys. Now I am in the weekly charts. Why? Because we have we are on Sunday. Okay, so Sunday now, you can say there is 11 hours left to check. Yes, 11 hours to close the weekly one, or the weekly candle. So now guys, this guy here, based on technical analysis, if this guy closed like that, they call it hanging man. Okay, they call it hanging man. Okay, so hanging man is a reversal candle that switch the trend from bullish one to bearish one. Remember that when you see this pattern here. Excuse me, let me show you inside the market. Hanging man. Okay, it is like that, and it is like this. So I think it's the same pattern here, guys. DailyFX. This is an old website that really helps us a lot to understand a lot of things. So I think we must thank these guys for this good project. So guys, hanging man, this is it. When you see this kind of, you know, this reversal candles, you can have an idea that the market can reverse. Okay, but guys, remember, this is these signs are based on the first thing is stocks and also the forex. But for cryptos, we must take a look at the perception that people are using to buy and to sell. So this is a hanging man, yes, but we have to be careful that people are buying the lows. So that's why you see this candle here. So instead of having a bearish engulfing, we are having some suspicious hanging man, not 100% but suspicious. There is a dops here, okay? So I think, guys, this reversal candle here can be negative at some point, but remember that every low represents something interesting. So we have to check another high here, sorry, another low, and I will change the source so I can have, let's move it to okay, it's there. We need 7 days above, okay, it's like that, okay. So this is it, guys, okay, it's here based on the head of moving average. You can use that. And also this is called, okay, this is called green zone. Guys, remember, this is not technical analysis, this is the way of trading, okay? If you want to learn technical analysis, it's free on the internet. You don't need to buy anything, or someone tell you, hey, this is, for example, lessons or webinars or seminars. Trust me, it's free. But the art of trading or art of trading, make yourself inside this case. You have a strategy that makes money. Will you give it for free? Of course not. Okay. So this is called, guys, a green zone. And remember, you will find one day that the market will respect this zone here when people will say to you, hey, you have to short. Hey, now your finance is done. Okay, and you will say, and maybe you will short, and you will find at the end of time that the green zone plays its role correctly. So here, guys, remember, sorry, that's here people are willing to buy. So we have to check the order book to see if there is any, okay, any buy orders